taking a look at the US labour report, there is a chance here that gold can recover some of its recent losses. Look here how far gold has fallen. I was talking to CNBC Arabia about this, and if you look at the recent falls, it's fallen, over 5.5% drop in, just a few days. Now, if we see a big miss in the US labour report on Friday, then that could be a catalyst for higher gold prices. Remember, the Fed sees the labour market through an inflationary or deflationary lens. If the labour market is strong, that's seen as inflationary, and that pushes yields and the dollar higher. If the labour market is weak, that's seen as deflationary, and that should pull yields and the dollar lower. The inflation picture being higher, more aggressive Federal Reserve, shifting the dot plot from Powell on September the 20th, that's what's been driving yields higher and the dollar. Then we had a little bit of a pullback on Wednesday from the yield surging higher, but the next test comes from the non-farm payroll. And if we see a big miss in the data, right, then we could see the yield move carrying on lower, dollar moving lower, and that'd be a good catalyst for gold upside. So on Friday, here's what to look for. If we see the headline coming in below 90,000, that's market's minimum expectations. And if we see unemployment coming in above 3.9%, that means that there's a weaker labour market. And ideally, if we saw average hourly earnings sub 4.2, and ideally, if we saw average weekly hours sub 34.3, and in a perfect ideal world, participation rate also falling to 62.8 or lower. If we saw that, but the headline and the unemployment rate are the most important factors. If we saw more people unemployed, as I've outlined there, then you would expect gold upside. Now you can see here, gold has had a very, strong upside out of these events. So from the US labour report over the last 15 years, average return of 0.48%. So gold does tend to gain out of the US labour market report. So if there's a fundamental reason for gains, then all the better. And look where we are. We're in this lovely support level. We can see prices really hyper extended lower. There's a lot of sellers there that've made some money. There'll be a bit of profit taking going on. Got that big underneath support level, all of which should be very supportive for gold, should there be a reason for gold upside. So keep an eye on this. It could be a very significant day for gold. A big jobs report and a big miss in the data, and markets being disappointed with the US labour, then you'd expect gold to start moving higher, and you got quite a clear run up to sort of 1860, 1880. So it's certainly one to be looking out for. Major trade risks, all outlooks have risks. There's never a risk-free trade or outlook. And the major risk here, of course, is if the US jobs print comes in very strong. That would obviously be a key headwind for this outlook. Don't just trade it, seize an exit.